Welcome, welcome. Good morning, good morning. I'm so glad that you guys are here today. We have a lot of great information I'm going to share with you. I want to kind of just introduce myself here in just a moment, but I would love to go around the room and just kind of get to know you all a little better. My name is Theresa Tumber, and I'm with Operation Hope. And I'll go into my spiel in a second here, but why don't we start, if everybody can share, I'll do the online people first, and then we'll have everybody in the room. So why don't I call on Samantha first, if you wouldn't mind introducing yourselves, tell me a little bit about you. Oh. Don't forget to come off mute, Samantha. Sorry. Oh, maybe she's not. Oh, sorry, baby screaming. Okay, we get it. I'm a mom too. All right.
As well, so that way I can tell them how you have impacted me.
Okay, wonderful. Aruna, why don't you share? And forgive me if I'm pronouncing your name incorrectly.
Good morning, Theresa. Yeah, you pronounced it right.
Okay.
So
good.
My name is Aruna. I have been a real estate agent for 4 years.
Okay.
And yeah, part-time. I'm working part-time, so I have another work as well.
Okay, wonderful.
Allowed to hear industry insights today from you.
Very good. Thank you. Well, I'm so grateful you're here. Thank you for coming.
Thank
All right,
you.
why don't we go to Tanya next?
Morning.
Morning.
I'm an agent in the industry for about 1.5 years. I've been with Coastal for about 1 year. I do this full time.
Wonderful, wonderful. Welcome, welcome. All right, Carol Lee.
Yeah, good morning.
Good morning.
I am a full-time agent as well. I've been in the industry about 1 year, and I also help my husband do the books and stuff for his construction company. So when I'm not playing agent, I'm playing bookkeeper, but still within the same industry.
I got you. You know, us women, we tend to wear many hats, don't we?
We do.
Yes, totally understand. Welcome, welcome. Glad you're here as well. And then I think we have Stacy who just came online. Stacy, guess what? You get to do a tap dance on video for us. Just kidding.
Okay, well, that's really not going to happen, but that's okay.
So we would love for you to share who you are and, tell us how long you've been in the business.
Okay, well, I've been doing real estate since '97. Started out with new construction, then exclusive buyer agency, and then certainly to Keller Williams 16 years ago.
Okay.
Yeah, I just love it.
Wonderful.
I mean, there's a lot that you learn. Everything is learning every day. I love it.
Excellent. Well, I'm glad you're here as well. Welcome. I don't think I missed anybody. I'm going to go ahead and I'm just going to mention it's Bill, correct? Is it Bill?
Adam.
Adam. I'm sorry. Adam. I don't know why I want to call you Bill. Forgive me. Oh my goodness. Adam, I'm so sorry. So Adam's in the room with us.
Yes, ma'am. I've been with Coastal over 3 years, and I mainly sell commercial real estate. Love serving people.
Wonderful, wonderful. Very glad you're here as well. And Deja, I'm going to have you to kind of introduce yourself, and then you can kind of tell everybody why you brought me here.
Yeah. Okay. So you're gonna have to put your wrong. Can you hear me okay, everybody? Oh,
I'm on mute, but it's not. I don't know how to take it off.
you just have to mute your computer. I can come up to you.
Muted. It does this at the Hive too, and I try to mute it, but it just doesn't work. I had this on mute, right? It didn't work. So anyway.
Oh, we're muted right here, but it's okay.
Okay.
So, good morning, everybody. I am Deja, and I've been in real estate for 5 years. And one of the things that has challenged me was kind of breaking through into a new market. So even though I've been in real estate for 5 years, I've been in Virginia for 3. This is my 3rd year, and I've been working with retail real estate versus rental properties. So it's been a switch in my expertise. And then I've been doing well, but I haven't had a chance to like put together a business plan. And everyone kept, as I was searching for more information on building a business the right way and using the resources at the Hive, everyone keeps telling me that I need a business plan. So I made one, and Theresa helped me with that. And her services were free, and she's my coach. I consider her my coach. And she's my she helps me in like just strategic ways that I can build and feel comfortable to take the next steps. And I appreciate that. So, and then also making me get in front of the camera and talk to people on Zoom. So that's been good. So I just wanted to share her resources because she also helps with credit counseling for our clients that are challenged. She'll help them for free. They don't have to pay anybody for it. And they'll actually learn how to manage their credit for the future. And that's just the start. It's just so much financial education that she can share with us. So I just wanted to bring her here so you guys know, and then you can share her with your clients, and then we can just all make money.
That's
So,
right.
yeah.
Welcome. Oh, I'm so glad you're here too. And thank
Thank
you for
you.
inviting me here. That's
Sure.
so wonderful. Thank you. Thank you. Thank you. So, so anyway, I'm excited to share with you a little bit about myself and what we do at Operation Hope. Today what I'm going to do is just kind of give you a feel for what kind of education your clients will receive. I'm going to kind of make you go through the same thing they would, but hopefully you'll gain a few tips and things as well along the way as we do this. I always feel like, even if you walk away with just one thing, it's one thing you didn't know before you got here. So one of the things I want to share with you personally and myself, I actually have been in credit and collections experience for over 30 years. So I'm very versed on not just personal credit, I'm also versed on business credit. Operation Hope, I've been with them since April 4th of last year. I actually interviewed with them January of last year, and I got COVID pneumonia and was in the hospital for a week. And so they held on to the position because they saw my background as being very expertise in my field and felt that, that I would be a good fit for the nonprofit. So lo and behold, April 4th, I started, they held the position until I could recover from the COVID pneumonia. And I'm just very grateful because I have a passion for what I do. Hopefully you see that today and know that I really do love what I do. So believe it or not, I did originally go into, when I was during COVID, I was really trying to figure out what I wanted to do. I had left a career and just wanting to change. And I had started looking into real estate, started studying for the exam, and just started thinking, I don't know if this is what I want to do. It started making me really think about things. And somehow or another, I started getting heavily pursued by the insurance industry. So my line of business and education went to that route. And I am licensed insurance agent. I am not selling insurance right now. So I am not here to sell you insurance. Let me just ease your mind right now. But I am a licensed insurance agent that can answer any questions. I can be kind of a go-to person if you have a question about different things of insurance, because I'm licensed in both North Carolina and Virginia for all insurances, health, life, annuities, property and casualty, you name it. So again, I'm not selling you insurance. I just want you to know I'm a resource if you have questions in regards to insurance. A lot of insurance agents don't like me telling you some of the things that I think agents should disclose to their clients. And so anyway, I actually started my credit journey very early in life. I grew up in a household where my father was a compulsive gambler and an alcoholic, and he beat on my mom pretty regularly. And unfortunately, I was a witness to that. At 12 years old, my parents finally divorced. And my brother, who was 3 years younger than myself, and I went to live with my mother. So she was a single mom, not a high school grad. It was a very struggling time. I lived off of meatloaf, spaghetti, and hot dogs. And I still hate meatloaf today. Everybody says, oh, you've got to try mine. No. I try it. I don't like it. So at any rate, at 16, I started dating a boy my mom didn't like, and she ended up kicking me out on the street. told me I couldn't come home until I dropped the boy. Well, unfortunately, I was not one of those, females that said I was going to do that. And I never went back home. I figured I was going to do whatever it took to never hear those words, "I told you so." So I worked, I was still in high school. I did finish high school by the skin of my teeth. I also had a car. I didn't have a car from my mom, but I gained a car paying $5 a week. I'm going to be 53 this year. So this was back in 1988, 89 timeframe. For those of you who might even be old enough can remember, minimum wage at that time was $3.35 an hour. So I was working a part-time job at Taco Bell, trying to get through school, ended up following the boy to California. Within a week of getting there, my car died. And I didn't know what credit was. They didn't teach credit. They still don't teach credit. They don't teach it in school. They don't teach it anywhere, really. And a lot of the people that are out there teaching it do not know enough about it to be teaching people. So I always caution you, if you direct people to someone that's with credit, make sure they really know their stuff, because there's a lot of misinformation being given out there by people who popped up from COVID saying, "I'm going to teach people about credit and I'm going to charge them for it." And unfortunately, that they probably don't know the first thing. And if you ask them to look at their personal finances, they're probably a hot mess. So I'm proud to say, even through the diversity of getting myself into $20,000 in credit card debt at 19 years old, because I got 2 credit cards sent to me when I finally started establishing credit with my very first credit card, which was a Learner's Department Store credit card, now known as New York and Company. I got $10,000 from Bank of America on 2 Visa cards. Well, that lovely boy that I was with, who I should have dumped long before I did, helped me spend all $20,000 of that. I ended up also having to rack up student loans because they based it off of my parents' income, even though they were not helping me financially in any way, shape, or form, but they still forced me to base my financial aid and stuff off my parents' income. So I couldn't get any grants or anything. And so I was racking up student loans, and then I had to get a new car. Struggled to get a car, couldn't get any co-signers because I didn't have enough credit to warrant me given any sort of car. Luckily, I worked for a Ford dealer, and they did actually help me out. They denied me at first, but the general manager spoke on my behalf, saying, "This girl's working 5 jobs. She's putting herself through school, and she's doing the right thing. Let's do what we can to help her." And so I got a Ford Escort. It was a shell on wheels. I kid you not. So I tell you this story because I have an 850 credit score. It's the highest credit score you can get. I have maintained that for most of my adult life. So I know what I'm talking about when it comes to credit. What we are going to talk about today is a little bit about, I want you to know a little bit about what we do and our programs and services, because there is a lot to what we do. And Operation Hope is not just a credit program, or we don't just deal with credit, we do other things as well. So I really want you to think about those people that you know today that perhaps may be a fit for anything that I can help them with, or I can get them the help for. And they don't even have to be local. If you have friends and family that live in another area of the Virginia or another state in the US, I can help anyone anywhere. So I don't have any kind of territories or anything like that. There is never a fee for anything that we do with Operation Hope. Operation Hope is actually funded by our partners. Our partners have actually been the ones that helped us to get where we are today. Fulton Bank happens to be my partner. And so if you know a Fulton Bank or you don't know a Fulton Bank, they're a very smaller bank in the area, but they are the ones that put me here to offer the free services. So I don't work for Fulton, I work for Operation Hope, but Fulton is who pays to keep me in this area and pays our administrative costs and things like that to keep us afloat. So I do like to recognize them and appreciate their partnership. Yeah. So first of all, we're going to talk a little bit about some other things today that you can share with your clients, because this is pertain to you. But education, when you can offer that, that offers value to your clients. When your clients feel like they get value from you, what does that do? It creates loyalty. It creates referrals. It creates a lot of different things. So We're going to talk a little bit about disaster preparedness and recovery, earned income tax credit, or sometimes people call it EIC, which is earned income credit. Understanding your credit. We're going to talk about what makes up your credit score. We're going to know your rights as a consumer and establish and rebuild your credit profile. One of the things I want you to know about this is what I would go through and what I would recommend that you refer all of your clients to come to one of my workshops. This workshop I'm doing right now is exactly the workshop they will come to when they see me. So you're not getting something different than what they would normally see. Okay. So we've been around for 31 years, May 5th of this year. The reason that we've come to be is our founder, John Hope Bryant. He actually was born in Compton, California. He was a witness to the LA riots, the Rodney King beating out in Los Angeles, South Central LA. And his parents had moved him over there when he was a young boy. And he was so distraught over what had happened to his community by the riots, because it really, truly was. I lived outside of the area myself in California at the time. It was the worst riot. It was worse than George Floyd. And so, or any other riot that we've had in this country. So that particular instance inspired him to feel that he needed to do something. He took money out of his own bank account. He rented a bus. He packed it full of bankers and lenders and things like that. He drove them down into the devastation. And he said, I want you to see the opportunities before you, because you would never see them otherwise. This is an opportunity for you to be able to help me to educate disenfranchised communities such as this. These communities, things like this happen because they've never been taught how money works. And as a result, they are check cashing customers. They're not banking customers. They're renters. They're not homeowners. And they're certainly not small business owners. So working with me will allow me to educate these people, because we certainly don't teach financial literacy in schools. And in addition to that, I will be able to continue the works of Reverend Martin Luther King Jr., but rather than civil rights, I'll be able to move that into the civil rights movement. And he said, I want to be able to create financial dignity and inclusion for all. So Operation Hope is the leading global provider of financial dignity and education and economic empowerment programs for low to moderate income youth, individuals and families in underserved communities. Project 5117 is Hope's four-pronged approach to combating economic inequality. The programs under Project 5117 improve financial literacy, increase the ratio of business role models and business internships, and it helps us to reach the underbanked and underserved citizens.
Show this to her. No, show this to the Zoom.
Are they not seeing it?
No, they're not seeing the slides.
Oh, I thought it was sharing earlier. I'm so sorry, y'all. Goodness gracious. Hang on. Sorry, y'all. I have to get permission to share, and I thought this whole time y'all were seeing it. Forgive me. We're just getting someone here to help me with that, because they got to give me permission. Sorry, y'all. It looks like somebody has to give me permission. You might have to do that on your Zoom end, whoever is the host.
Who is the? I think you might be. Did you know who the host is? You sent him a link.
Well, I sent her the team link from the side.
Hang tight, they're working on it. Does anybody have any questions while we're waiting? Yeah, go ahead.
I love everything about the conversation of our disenfranchised communities is something I think we're deeply about in terms of investors and flipping commercial properties and commercial houses. And do you have any case studies of things they've done, like all the bank? I know you're going to get to that wonderful point, but the bankers, did they flip the communities that were devastated, or how did that?
Yeah, I can actually go into that while we're kind of waiting here for a minute. So literally the whole idea behind what we do is we are educating people, which is now, he said, by education, we will turn these people into banking customers, homeowners, and small business owners. And so with that, we have actually done quite a number, which we'll share here in a minute, of how many we've been able to help to date. Fast growing. We're doing a lot of work out there, and we're not just here in Hampton Roads, we're nationwide. So we have over 200 locations nationwide with coaches like myself. And so I'm considered a financial coach. And hi, that's okay. Go ahead. Yeah. I think you guys have to, whoever's the host of the link, you guys have
Okay,
to give
so
me permission to.
So you're
share.
not logged in as
No.
the host. All right,
No.
who's logged
I
in?
sent the link that Thomasina sent.
I'm just using the link
one
she
she
sent me.
before.
Yeah, well, that wouldn't be it. You have to be logged in and be the host and share. Is anybody logged in as the host?
I think I saw Thomasina. She's on.
Thomasina, are you able to give me permission to share my screen?
It could be, where'd Kara go? Kara's doing her podcast. You have the login. Try logging in to the Zoom on the office Zoom
All right.
and see if it lets you in, because somebody's logged in. Yeah, because it's not gonna let you share
Yeah, whoever's
screen.
under Thomasina is probably the.
Yeah, but I don't know who it
Yeah,
is
me either.
to share your screen.
That must be, yeah, she's saying.
Let me see if she did.
It says Thomasina's the host in the participants.
Yeah, but that's the account. So any of us
Yeah.
that log in, I could be logged in teaching my class and it's gonna show Thomasina.
I got you, yeah.
Yeah, so that's our problem there.
So Thomasina can't go down
Hey,
to share screen and change.
Carla, it's Sam. When I moved to my iPad, it logged in for class, not for my account. So let
Can
me
you just hit share, allow her to share screen?
yeah.
Thank you.
Right. Oh, yeah, tell Blake.
Yeah, I'll let him know.
We're still, I think she's still working on it.
So I didn't mean to talk too much, man. I'm sorry, but
Fine.
I'm sure you deal with same stumbling blocks like the haves and have-nots, like some
Did that
people
work?
use.
Oh, I'm sorry. Not yet.
I mean-
No.
I made you. the
No, it
host.
made Carol Lee the host.
Hang on a second.
I have to allow all participants.
Whose account am I making the host? Oh, I see. Amen.
Because I'm just logged in as well, any of you on here. I'm just using a link that Deja forwarded to me.
Since Thomasina's the host now.
Hold on.
Okay.
Okay, I think you're the host now.
Okay, there we go.
Sorry about that.
That's okay.
Thank you.
I'm so sorry here. I'm flipping through screens thinking y'all could see it and you couldn't. So can everybody see it online now?
Yeah.
Okay, good.
Yes.
Good. All right. So let me get my little PowerPoint back up here. So with Hope's four-pronged approach, we've actually been able to improve financial literacy, increase the ratio of business role models and business internships, reach America's underserved and underbanked citizens, which helps to strengthen small businesses and create new entrepreneurs as well. So the economic goal or the end goal is to create economically stabilized communities. So as you can see, we've done quite a bit just in this realm as well. This is, as I mentioned a minute ago, we're over 200 locations nationwide. That's our national call center at the bottom of the screen there that you see. And, oh, can y'all see that?
You can see it.
Okay, maybe it's just not on this end.
Yeah.
All right. We actually have 4 different models that we offer. So these are all the different programs that we offer to clients nationwide. The Hope Inside Adult is what I fall under, although I do not specialize in home buyer preparedness. We have HUD certified coaches that help clients to be able to get the funding that they need for home ownership, down payment. They can help them with learning the process of becoming a homeowner, things that are important. Yes, go ahead.
Can you just speak on that in case any of us wanted to be a certified HUD home buyer? Like, help them with this program?
As far as teaming up with our home buyer coaches, that would probably be something you would want to call the call center number at the bottom of the screen and just let them know that you would love to be able to team up with any of the coaches that are home buying coaches, and they would be able to, decide where it would be a good fit for you to be in your area and so forth. I don't know that we have a specific home buyer coach yet in this area. I'm not saying that's not something that would be possible, but right now, I don't know that we have one. The closest one I think we have right now is a HUD certified coach is in Charlottesville as of right now. So that's not to say they're not in the works of getting somebody. We just don't have any that I'm aware of right now. There may be one that I'm not even aware of. So, but to answer that question, that would be the best way if you wanted to connect with our home office to find out a little bit about how you might be able to connect with coaches. Now, what they're probably going to say to you is most likely you need to be connected with a credit coach like myself so that they can go through the credit process to make sure that they're in the position of being able to even qualify for a home loan. We find that in this area, the average in Virginia Beach in general, in fact, we have a credit index you can look at on the website, operationhope.org. There's actually a credit index that you can see what the average credit score is per zip code. So if you wanted to take a look at that, that's a great way to know, like, where are the main clients that maybe somebody I can work with to help or any of those sorts of things. But they are going to usually want them to go through a credit money management program, make sure that they can get the highest score they can to help them get, I mean, literally it can take as little as, 60 days in some cases for clients. I just started with a client January 17th. We met yesterday. He increased his credit score from that in this short amount of time, 74 points. That's huge. He was in the 500s. He's now in the 600s. So when you can help somebody do that, that's a major improvement to help them with qualification of home loans and those sorts of things. So is that for everybody? No, every situation is different. Can't really say, oh, it'll only take you this long, because it depends on what's on their credit. It depends on what their resources are that they have available to help pay down debt and things like that. So, but with the credit money management program, one of the things that are two of the things that our main focus is on that is to get them to a 700 or higher credit score. In addition to that, we want them to start creating savings, not just one savings account, multiple savings. We want them to have emergency savings. We want them to have short-term and long-term goals for savings. We actually help them with budgeting. That was what it took for this particular gentleman that I just helped get a 74-point increase. It was just working through and helping him with his budget to pay bills on time and paid some of the debt down. We also help with teaching them how to pay down debt or pay off debt. So we do a lot of different things. We really are about educating. The very first thing I do after they meet with me, and I do a meet and greet first. I don't dive right into their credit. I think it's important they get to know me as a person and know that everything they share with me is safe. It's not going anywhere. No one's going to know their information, even if they refer their best friend to me, and nor would their realtor be aware of their personal credit or financial situation. We don't disclose that information to anyone. So I want you to know that their information is safe. We actually pull their credit report on their second appointment with me. I actually pull only their TransUnion credit. It's a soft pull, so it's not affecting their credit score in any way. It actually is going to allow me to educate them how to read their credit report. Because when they know what's on their credit report, they understand every number, every letter, what everything represents, they have more empowerment to know how to move forward. So after we have that meeting, I provide them with a work plan that will tell them the steps that they need to do to help boost their credit score. And they have to do regular check-ins with me at minimum once a month. I prefer more, but not everybody can do it as much. So I like for them to check in with me to see their progress, see where they're going with things. We do, updates of their credit pulls to see how their score is improving, but we're also checking on that savings element. We want to make sure that they're putting money away in savings. So that is kind of our primary, that's been kind of our core program that we've had since we started 31 years ago, but we've built on to there over the years. So the other part that I also specialize in is small business development. So I help clients that are wanting to start a business, don't know where to start. Okay, I have clients that kind of started, they ran and got their LLC, they got their EIN, but they don't know what's next. They don't know where to go now. So I help them with developing a business plan, as you heard Deja share earlier. So I help them with creating their business plan. We have an 8-week program. It's no cost to them. I actually educate them. I have been a small business owner, brick and mortar and home-based business for most of my adult life. I was an entrepreneur as early as 4 years old. So I'm very passionate for entrepreneurs. They have the technical side where they get my help along the way, providing that they enroll in the class and enroll in our small business program. All of it comes at no cost to them. Hope Inside Youth, that's not something we have here yet, but it's something I'm very passionate about. As you kind of know my personal story a little bit, very passionate in helping those 15 to 17-year-olds be able to learn about financial literacy. And we have so many of them that are youth that are starting to do their dog walking, pet sitting, things like that kind of opportunities to where they want to open their own little businesses. And so I'm very passionate wanting to help those. I'm working towards building a program that will allow them to come in. It's not something I'll be doing through Operation Hope. It's just my gift back to the community to help them to be able to be prepared for when they get out of college or when they get out on their own, to know what they need to do to protect their credit and so forth. So I will keep you informed, providing that you provide the information to Deja today so that I can get you that information and you can share that with your clients to let them know. I do like to have their parents in attendance if possible. And the reason being is we're trying to create generational changes here. If the parents were never taught, how can they continue to teach the children? They've got to be taught as well. So we don't want just the child to be the one to learn. We want the parents to learn as well. I actually had a woman that came to me and said, you know what, I've been doing this. I've been doing credit for years. I know everything there is. I don't need to go through my credit report. I said, just humor me. She took 5 pages of notes. So it shows you that there's a lot of knowledge that a lot of people don't know. Hope Inside the Workplace is another program we have. This actually is where business owners have reached out to Operation Hope asking for their employees to have dedicated coaches just on the credit and money management program. And then the last one is Hope Inside Disaster. These are financial disasters we help them to prepare for. COVID was a financial disaster for most of the world. Losing a job, being hospitalized or sick for any length of time, again, is a financial disaster. And of course, any natural disaster or fire, things like that. But then we're also there in the aftermath to help in the recovery. We've actually teamed up with the American Red Cross, FEMA, and this combined federal campaign. They're partnered with us in helping us with this recovery process. And as you can see here, the Katrina here, we actually launched our Hope Coalition America, which is the HCA, after 9/11. So in 2001, we've actually responded to over 110 federally declared disasters since 2001, and we've served over 1.2 million in that process as well. So this is a really great thing. It's a great resource for you to share with your clients. I encourage you to write it down, even encourage you to do it yourself. It's an anonymous survey. And what it does is it's a 10 questionnaire, multiple choice. They go to dfrscore.org. And when they go to that, there will spit out a score for them. It's based on, 10 out of 100. So every 10 kind of tells them their percentage of where they fall on that scale of 100% in financial preparedness. It also gives them a financial preparedness plan so that they can know the steps they need to do that they fall short in their financial preparedness. So not only will they get a score, but they're also going to get a plan to help them be able to plan ahead. As a result of everyone that came today, I will be happy to share with you a emergency financial first aid kit. It's called our EFAC, as well as our personal disaster preparedness guide. This is actually something that is very helpful even for you. We live in an area where we could have a hurricane or any kind of natural disaster. And this is something I would probably recommend not printing it at a printer that you maybe can't print a lot of pages in ink, because this is many pages long. So maybe save it to your computer, but it is a great resource. You will find it to be so useful, especially for what we have in this area when we have any kind of disaster, because you are going to put your personal information. My husband and I printed it out, filled it out, and we have it in our safety deposit box in the event we need it. And we also have another one in our safe at home, just so that in the event of a disaster, we have all of the things at our fingertips, prepared and planned, and not having to stress about, oh, where is everything, you know. So as I said, we're there in the aftermath as well. We help prepare clients with getting back on their feet. We help them with copies of destroyed documents. Like in the hurricanes last year in Florida, we were able to help clients obtain documents they lost during the storm, you know, birth certificates, IDs, things like that. We were able to help small business owners with small business counseling, connecting them with FEMA and other resources that were available to them. Right now, being that we're in tax season still, this is a great thing to share with your clients as well. That link, if you want to take a screenshot of that link or share that with anybody, it's called Volunteer Income Tax Assistance, or VITA. It's a program that offers free tax help to people who are generally making $56,000 or less a year, people who might have disabilities, or maybe even those who are limited English speaking taxpayers. But not only that, it's really great for those clients that you may have that are particularly 60 years of age or older, because they have specialized questions in their tax returns that they may need help with regards to pensions and retirement related issues, which are unique to seniors. The EITC, this is important to know, believe it or not, 1 in 4 people do not take this credit, believe it or not. And this is a credit that everyone can qualify for if you are filing a tax return and you work. You actually have the ability to reduce your tax liability, or maybe even get a refund if you don't owe anything. So this is for this particular tax year. And as you can see here, depending on whether or not you have children or not, whether you're single or married, this is going to show you what your tax credit would be for the year. In addition to that, you also have the child tax credit of $2,000 per qualifying child. So if you've gotten your taxes done already this year and you did not personally do your taxes, I highly encourage you to go back your last 3 years to double check that you were receiving this credit, because believe it or not, these people that are doing taxes are not necessarily people that are very experienced, like a CPA, for example, especially if you're not using a CPA. A lot of these people are hired, you know, within 3 months, and they're crammed course, and there's no possible way they could know everything about tax law. So you need to make sure you're getting the credits, make sure your clients know to be taking these credits, because there's a good chance you might even be able to help them find some down payment money there, simply because they did not get their tax credits from the last 3 years, and they can do an amended return to get that. All right, so what we came here for today, very important, annualcreditreport.com. is a very important. I'd just love to see or hear how many of you actually pull your credit report yourselves every year, all 3 of your credit bureaus.
Not every year. I've done it. I don't do it every year though.
With fraud being as prevalent as it is today, you should at minimum be a leader to your clients and teaching them the importance of doing this. You yourself should be doing it. Every year minimum. They actually suggest that you do it twice a year now, because the only way you're going to catch potential fraud is by checking your credit reports. A lot of people think they just need to look at one, and that's not true, because what's reported on one may not be reported on the other 2, or they may only report to 2 of the 3. And if you're only pulling the 1, you don't even know there's collections or other things on the others, because they don't report to all 3. Not all creditors do. Some report to 1 of the 3, 2 of the 3, or all 3. So it's important that you pull all 3. Annualcreditreport.com is the most reliable source. It is free, all 3 bureaus once a year. I encourage people to not only take advantage of getting these every year, but putting a reminder once you pull them. So if you were to pull all 3 of these today, and you have a calendar, set a reminder to pull them again next year on your calendar. Because if it's not on your calendar, and I know everybody who's in real estate, you guys are so crazy busy, the last thing you're going to remember is pulling your credit reports. So take the time to set it on your calendar and set it as a reminder. So you just remember to do it every year, and teach your clients to do the same. Okay. The things that you have the most control over when it comes to credit reports is this section right here that I'm showing you. It's very important that clients know how to check the name. Notice there's Cook and Duncan on here. That's going to be your first sign of potential fraud. Because believe it or not, if you're not checking your credit reports, if you don't go by Duncan, someone else may have potentially been trying to use your social security number to get credit under your profile. Also check that social security number. Believe it or not, that social security number sometimes has been 1 digit off on some people's reports. In addition to that, the date of birth could be wrong. Typically, I don't see phone numbers on credit reports, not really necessary to put on there if it's not. In file means typically that they have created a file with that credit bureau as early as whatever time. And typically creditors like to see that you have open credit that's as far back as that. A lot of times people don't realize, how many of you, I'm just curious, let me do a little thing here with everybody online. I want to see how many of you have ever canceled a credit card. Okay, if you have canceled a credit card, you have dropped your score by 100 points. Did you know that? If your creditor closes your card because you haven't been using it, it drops your score 100 points. Did you know that, Alex? Yeah, it's crazy. Carolee, did you know that? I see your hand up.
Well, I was just saying that, yes, I had closed one, and I didn't know that it was 100 points. I knew that it dropped, but I'm shocked at how much.
Yes, it blows everyone's mind when I tell them that. It is insane. I want you to realize the 2 reasons why, and I will tell you about those in a few minutes, but I do like to share that because most people don't think anything of it. So I always say, before you get credit, make sure that it makes sense. Make sure you read those disclosures and those fees, because what most people don't realize, sometimes they get a card and then there's an annual fee. And they're like, oh, I'm not paying this annual fee. They close the card out. Well, they just lowered their score as a result of that. So clients don't know these same things. So it's important that we make sure they know these things so that they can be better educated in keeping their score. Now, the other thing that's important on this is making sure that their addresses are listed in the order in which they've actually lived. That's important because when you pull your credit reports every year, if you don't get to pull your credit report, it's likely that whatever security questions you're answering when you try to pull your credit reports, that you are not answering them correctly as to what's showing on your credit report. So if your previous address is showing as your current address and your current address on this screen is actually your previous address, you would answer the question incorrectly, because they may ask you what's your current address and you're thinking it as, 10 North Camino, and for whatever reason, they don't have that. They have Woodbine. So guess what? They may send your report to Woodbine instead of your actual address at North Camino. So it's important that you not only look to see if they're listed in the order in which you've lived, it's important to make sure those zip codes, streets are listed, like here, 10 North Camino. Is it a street? Is it a drive? Is it a road? What is it? All those things are very, very important. And then of course, employment. Does anyone know why employment needs to be listed and listed with the most recent and the one prior to that? Why is that important on a credit report?
Income verification.
Income verification, absolutely. Because what if you don't, and you would be amazed how many people I work with every day that have employment that was from like 15 years ago listed on their credit reports. And so they don't have that. And if they're trying to get a job and they don't list those on their resumes, guess what? Those people might be questioning whether or not they're truthful. So they may not be able to get the job because they don't have the most accurate information on their credit report. So these are the only sections of the credit report that the actual person themselves can actually change. And if you change it on one credit report, You got to do it on all three. So you can't just do it on TransUnion and expect the other two to correct too. You have to go to each bureau, create an account direct through TransUnion, Equifax, and Experian. Also, you need to find out which creditor is reporting it as such. Because if you go and fix it yourself and you come back next year and it's changed back, it's because one of your creditors has it listed as such and it's overriding what you just fixed. So you need to check with your creditors to see who's reporting it incorrectly. And most likely it's because they don't have the most current address on file. And that's one of the reasons why people get stuck with collection items, is because the creditor is billing to an old mailing address and then they never get any response from you. And guess what? And that, who, for whatever reason, that person's tearing up or throwing your mail away or whatever, not sending it back. And guess what? They're sending it over to collections, and then you pull your credit report trying to qualify for a home. And guess what? You can't, because you got this collection sitting out there. Okay. Did you have a question, Deja?
So we could put realtor on our credit report?
Absolutely. You can put whatever position you hold. You know, you would put, probably you would put coastal town realty, and then you would put position realtor. And then you would list it whatever your start date. And if you're not ending, you're still working there, you would leave the end date open.
I mean, I have to look and see. I'm not even sure if it even has employment on it ever since I left my W-2 job, you know?
Yeah, she was asking if she could actually put realtor as her position. Absolutely, it's your job. You know, even if you were self-employed, you would put that as well.
There, if I don't put it there.
Exactly, it won't, unless one of your creditors has listed it as such and has reported it as such. So if you don't have any creditors, then nobody's reporting it but you. Okay. Now, one of the things that I want to, how many of you use Credit Karma? Okay, I'm going to tell you today, stop using Credit Karma. And tell your consumers to stop using Credit Karma. Credit Karma uses what's called a Vantage score, which is what you see up here. Okay. Vantage score is an old scoring system that they used years ago, and it is not the most accurate credit score. Let me just give you an instance as to why they don't want to use Credit Karma, or you yourself. Credit Karma, I had a client that came into me that thought her score was in the 400s. I ran her TransUnion credit score, it was 650. That right there, they can't use Credit Karma to base it. Now, it can be sometimes higher than it is with Credit Karma and sometimes lower than it is. It's never usually a true score. The only way you can get a true score that most creditors use today, lenders and such, is a FICO 8. That is the most used and utilized scoring system that creditors and lenders use today. The other thing you don't want to do is, I had another client who I was working with. She was working with me to clear up some collection accounts on her credit. Guess what? Her collection accounts were showing 3 on my end. Credit Karma was only showing 2. Well, she didn't use my report I gave to her to utilize to call on those collections. She was using Credit Karma. So she was so excited. She called me. Oh my gosh, I'm so excited. Can't we see how my score went up? I got rid of all my collections. And I pulled it up and I said, wait a minute, there's still one on here. And she goes, no, there's not. There's only 2. And I said, well, this amount here, and it was from the first time I pulled it. So it wasn't a new one. She thought it was a new one. Sure enough, it wasn't showing on Credit Karma, but it was on the true annualcreditreport.com or even TransUnion. So again, another reason why you don't want to use that particular system to get your score from. The other things that are important to just note here is public records and collections. Collections, usually what I see on people's credit reports are utility bills, cable bills, cell phone bills, and medical bills. Medical bills, there is a law now that once they pay the medical debt or they get the insurance company to pay it, it has to come off their credit report within 30 to 60 days. That's on medical debt only. Okay, so if they've got medical debt on their credit report, they just need to get it paid. Once they get it paid, it comes off. As of, I think it's sometime this year, if it's under $500, they cannot report to the credit bureaus for medical providers.
Oh,
If it's over 500, they can.
oh, right.
So, but that doesn't, it's not retroactive to any of those that were prior to when the law changed. Okay, so if they do have some prior to that, they will have to get those cleared up. But I will tell you, Every one of my clients that I've worked with primarily, I find often that the reason that they got those on there in the first place is because number one, they didn't get a bill. Number two, they didn't know that the insurance company hadn't paid their portion. Because when a medical provider bills the insurance, if they code it with let's say you have Cigna and they code it with an Optima code, Cigna is going to kick it back and say, this is not a code we cover. Well, guess what? Your medical provider is not going to do the research to figure out why they didn't get paid from them. They're just going to bill the client and say, you need to pay this. The insurance company said they're not paying it. Well, most people don't realize to go and investigate that a little more. And they're like, oh, I guess I got to pay that. No,
Sure.
it's their fault that they coded it incorrectly. So you as a consumer need to go and talk to your insurance company and say, why didn't you pay this? Because your medical provider should, in most cases, tell you when it's not going to be covered by your insurance. They've made those negotiating contracts with insurance companies. They know what's covered and what's not. And they should provide you with that information prior to you receiving the service. Okay. So know that is something that could be easily cleaned up. And that's some of the reasons why many of my clients boost their score, because that's one of the biggest things that are affecting it. Now, the other thing to know is under explanation here, usually the first two line items are the two biggest impactors of the credit score. Okay. That actually means that once they get those cleared up, the other two are impacting it as well, but the first two are the biggest things that are impacting their score. So if they get those cleared up, a lot of times people get confused when they see numbers. They think it means 24 times they have insufficient credit. No, it's not. It's just a number, a coding number they use in their system for this type of explanation. So that has no relevance to the client. Just the code, just the information itself does. Okay. Any questions on any of that I just went over?
Very clear.
Okay, good. All right. So a lot of people like to know, like, where do they fall in the credit score gauge system? Okay. Obviously, the lower the credit score, the higher the risk for the lender or the creditor. Conversely, the higher the credit score, the lower the risk, and therefore the lower the interest rate and more opportunity for additional credit. So depending on where they fall, Virginia Beach tends to fall in the fair credit range, just so you know. Okay. There are pockets that might be a little higher than that, but the Virginia Beach in general falls in the fair credit range of scores. So there's a lot of help I can do for people out there, but I'm new to the area as of April of last year. So it's still kind of one of those things that I'm trying to get my name out there as much as possible so that we can help as many people as possible to bring these scores up. Am I going to be able to help everyone? No. Is everyone going to have to be patient? I'm one person handling 1 million people in Hampton Roads. So please tell your clients to be patient with me. I do get them on the schedule, but it's important that they not cancel because they could be waiting another. Right now I book about 1.5 months to 2 months out. So, you know, the sooner they get on the calendar and stay. And then I do, if they let me know, if you have a cancellation sooner, I can try to call them when I have a last minute cancellation, which I hate, but I do try to keep those people that want to get in sooner on a wait list so that they can potentially get in sooner. Okay. All right. So what makes up your credit score? A lot of people tend to think it's just payment history. Well, yeah, that's a large portion. It's 35% of your score. But the other percentage is the 30% is your utilization. Does anybody know what that means? Go ahead, Alex.
For example, like the only thing wrong with my credit is I have too much credit utilization on my credit cards.
So you've utilized too much
Yeah.
of your credit limit,
Yes.
correct? And that's what a lot of people don't realize. You should, I'll tell you what it is, but we're going to go into it again. No more than on a balance should you ever carry. If you have $1,000 credit limit, you should never carry more than 30%, which is $300. When you go over that, you are 30% affecting your score.
I'm sure. Even if there is some time, right?
Yes, even if it's paid on time, everything, it doesn't matter. It's that you're carrying a balance of more than 30%. People say to me all the time, well, why do they give us, why do they give us $1,000 limit if they won't let us use it? Well, they're testing you. They already know based on your credit to income ratio, how much you can afford. But if you're dumb enough to go out and spend more than 30%, they're going to charge you high interest on it. That's the way they look at it. So we have to teach people, and I didn't mean to, that's not
No,
calling you dumb,
no,
please. I understand.
Give you a worse
Yeah. Okay, good.
I love being the class time. I'm not class, that's kind of.
No.
Embarrassing one. So if you owe, let's say $3,000 on a credit card
Mhm.
and somehow you send them a check for $25,
Uh-huh.
they're gonna probably write you a letter to say, we don't want to do business with you anymore. Because their correspondences cost more than the amount of money you're paying.
It could lend to that.
That
Yeah, it could if you're in what his I don't know if anyone heard it online. He said, if you've got a $3,000 balance on your card and you're paying like a $25 amount in the month, that's what you said, right?
You spend the link and then you send them $25, they're just gonna write it off.
Yeah, yeah. So
This would be
we're going to
terrible.
cover that
That's
exact
terrible.
thing. Yeah, that would be terrible when
Yeah.
people pay, you haven't been paying and then you send them $25. Well, honestly, it can't be necessarily 100%. I don't want to get ahead of myself, but
No,
keep that thought because what you're saying is important and I am going to get to that.
Okay, I'm sorry.
No, you're fine. You're fine. But it's important that clients get those payments down because that is, right there, their payment history of not paying on time and their debt utilization is 65% of their score. Okay. And they don't know that they should keep those balances under 30%. The other thing is length of credit history. Okay. So remember how I talked about when you cancel your credit card? Oh, go ahead. I'm sorry.
Oh, I'm sorry. I had a question kind of on the topic you were just talking about.
Yeah.
So what is your thought on not paying the full balance off on purpose? I've heard a couple people say to leave like a 10% balance at the end of the billing cycle. What are your thoughts on that?
Well, the idea is that you don't necessarily have to carry a balance. I pay my credit cards in full every month. I charge what I charge. I pay them off every month in full.
Because of the interest that you'll be charged?
Yeah, me too.
Yeah, you don't want to be charged the interest because that's just wasted
Yep.
money you're throwing away. Okay.
Yep.
Number two, as long as you're keeping active, even if it just means, and sometimes what I even encourage people to do is find out if you have credit cards that you aren't using all the time, call those creditors today and say, hey, I realize I haven't been using this card in a while and I do want to start using it. I just want to make sure you're not about to cancel this for any reason. And I haven't used it in a while, but can you tell me, is this something that you can tell me when it will close as a result of non-use? They will tell you when that time frame is. And you need to make sure to go out and charge something to prevent them from closing that account. It costs lenders money to keep those on the books when there's nothing happening. So they want you to use them, even if it just means periodically, maybe once a quarter, just go buy something small and, $20 and then pay it off. Okay. It creates that activity. The biggest thing is the non-activity. That's the big thing, because that's where most people don't realize that every lender has a different time frame as to when they will close accounts. Okay. That one may be 90 days, one may be 6 months, one every 2 years. Every lender has a different time frame of when they will close it.
Kind of sounds like they're borrowing money to give to you.
They are in some respect.
So
They are kind of borrowing money. They have, it's kind of like that's money that's accessible to them to use. So if you're not using it, it's costing them money. Not only that, it's costing them administrative costs to maintain, keeping up with whether or not that's being used, mailing zero amount payment or statements, all those sorts of things. It's manpower, electricity, all the things that come in between it. That is a cost and something that lenders are getting more and more cracked down on and starting to close accounts down when they're not being used. So I always tell people, number one, make sure that it's a card you're going to probably use. If not, make sure you have a reminder on your calendar to use it periodically, so that you're not forgetting about it. Because if it's kept at home in the drawer, or maybe one thing I don't recommend people do is keep all your credit cards on you. I tell you this from experience. I had my purse stolen off of my desk when I lived in Southern California, and I carried all 12 of my credit cards at the time. And I was young, I didn't know any different. And when my credit cards got stolen, when you have been violated like that, your brain kind of shuts down. You're like, what did I have in there? You know, you just can't think of everything. And there was cards I didn't use ever. And I was like, I don't even remember what cards were in there. So I was a little frantic. And I was going through and canceling every card when I got to the last card. And that was a real problem because we didn't have the internet back then. And even if you do, which Bank of America location do you call? You know, you can Google Bank of America, but you might have a certain location that your account is located. And that's why you have those phone numbers on the back of your card. So I recommend that you keep most of your cards at home in a safe. That way, if they ever get stolen, they're locked in a safe. At least that gives a little bit more protection, a little more time to notify the lender. The other thing is if you have your Social Security, or when you have those cards on you, keep one or two, okay, on you, to use. The others, keep them at home. But for the two that you are keeping with you, have them put in a safe place with those other cards, the information on the back of your card, the phone number to call, the number on the back of the card, the actual card number, everything you can to let them know how your name appeared on it and everything. That way you can immediately call those two companies, and that's all you've got to call is two. That way you've got those in a safe place to be able to quickly grab them and make that call. The other thing is, don't carry your Social Security card on you. I learned this the hard way as well. My Social Security card was in there. I didn't really think of it was that big a deal. I mean, I was young. I was in my 22 years old. And when my Social Security card was stolen, I had filed a police report, which you would want to do if you ever get your credit card stolen. Make sure you file a police report. Make sure you notify each of the credit bureaus so that they can put what's called a fraud alert on all three of your credit bureaus. You have to contact each one of them. And they do that. And I think they keep it on there for about 3 years. It's important for you to do that because if that person takes your ID and goes out there to start trying to, and especially if you've got your Social Security card with them, they can easily start opening up credit. And guess what? You're going to have to prove that you weren't the one doing that. And it might be a little difficult. So if you have that police report, it lets lenders know that they need to really verify that it really is you before they open up credit. And the sooner you can do that, the better. The other thing is with Social Security that I did not realize, I called Social Security, and of course I was young, and I said, I need to get another Social Security number. My number was stolen. And they laughed at me. And she says, honey, you can't get a new Social Security number. That's your number for life. And I said, well, my purse was just stolen and my card was in there. And she goes, well, so sorry, but you shouldn't have been carrying that around with you. And I was like, well, I mean, I guess it's okay. I filed a police report. I think I've done everything right. Well, she kind of said to me, honey, that's not the only thing that can happen to you. And I was like, well, what? She said, well, if they have your ID and they have your Social Security card, they could file for your Social Security benefits when you retire. Now, as I'm approaching retirement now, you can bet I'm stressing a little bit for all the years I've worked so hard to think that someone else could potentially claim my Social Security benefits. So I encourage you, do not carry that card on you at all for that reason. So again, when you're canceling a credit card, think about if this is your first credit card you got when you first came out of high school. Length of credit history, right there, you just eliminated all that years of history. All that great on-time payment history, everything is gone. That's 15% of your score. Not only that, you just erased part of the utilization of what you have been given. So if you have, say, if you add up all your credit cards, this is based off of your credit card revolving accounts, okay? If you erase one of your credit cards, let's say it has a $5,000 limit on it, and all the other cards, and you add them all up together, all the credit limits, it comes to $30,000 that you have been given credit of. If you erase 5,000 of that, you just went in the reverse for your credit profile, which means when you canceled that card, you removed $5,000 you were given. So not only are you erasing the history, but you're reducing the amount of credit, which is not good either. Your credit should always be increasing, not decreasing. So when you have that happening, you want to make sure there is ways that you can cancel them. I don't like to go into that in the class, but there are ways that you can cancel a card, and you have to do it very strategically. So if you have a situation where somebody needs to do that, have them reach out to me and I can try to teach them how to do it. I don't really like to teach it now because you will forget and then you'll blame me later when you do it the wrong way. I'd rather you call me and we'll teach you how to write. Let's see. What else did I want to cover on that? I think that was it. So account diversity. Account diversity is having revolving and installment credit. A lot of the people in our area, they only have installment. They have no revolving. So what are revolving? We're going to talk about that, but you need to make sure that they have both because 10% of their score is affected by only having one type. Okay. A lot of them may only have student loans. That's installment loans. Okay. They have no credit cards, or other types of revolving. New credit, 10% new credit. You don't want to have, when you have you've canceled all that long history, you're dropping your score potentially because everything else you have is 5 years or less of history. So you're potentially dropping your score by only having new credit, but also you want to have some new credit to show that you're still being offered credit. So it's not that you don't want to get any, but you still want to have longevity in your credit so that it doesn't supersede what you have. And you're constantly in that new credit mode because you keep canceling cards and now it's just diminishing that length of history that you have. So you want to keep that in check as well. Go ahead.
Absolutely love the presentation. Can I get your information, please? Because I have to set the other child.
Yeah, go ahead. No worries. No
Love
worries.
the presentation.
No worries.
Can you text me your zip code that you
Yes,
live in?
ma'am. Yes, ma'am. Thank you for having me.
Yes. Thanks for coming. No worries. All right, so here's just a little bit real quickly about payment history. It identifies if you have had paid past credit accounts on time, including the payment history of all revolving and installment debt. It includes public records and collection items, details on later missed payments with regards to those types of accounts. Anybody that says, hey, I have a charge off, I don't have to pay that, they're wrong. Anybody that's out there telling you differently is wrong. If you have a charge off, people tend to think that, well, they wrote it off on their taxes, I don't have to pay that now. That is not correct. It is still your debt. And most likely a charge off is on its way to an attorney's office, which means it's going into collections. If it's not going to an attorney's, it's going straight to collections in most cases. And then it's going to eventually get exhausted at the collection agencies, and they're actually going to move it to an attorney to move for judgment, which means that they're going to garnish if the judgment is granted. They're going to garnish in any way, shape, or form: tax return, confiscation, bank accounts, retirement funds, forcing you to sell items, and so forth. So charge-offs are just that the creditor doesn't want to look at it on their books anymore. They're just tired of looking at it. They're like, somebody else try to get this collected. We've tried everything and exhausted our efforts. Calculates also how many accounts show no late payments as well. I do want to mention, since you guys are in real estate, this is important to know as well. And this is probably what most people say when they come to my workshop, of how much this is something they walk away with, because it's not something that people teach out there. And it's based on liens on property. So here's just something that I have privy to share, and you probably won't hear this anywhere else, and it's only because I have the experience of it. I actually used to be a credit manager for a supply company for roofing materials. So we had roofers that came and got supplies from us for their jobs, and they would do the job. And we had a particular gentleman that came in. His credit with us was always kind of wishy-washy. He would pay, but it would sometimes be, many months late. And I was at the point I was just getting ready to cut him off from being able to get any more credit with us. He was going to have to pay his account down. Well, he went and did a house. It was an elderly couple. The husband had hired them to put the new roof on. Well, he died in the middle of the job. And this little old lady had a home that unfortunately got to a position that she did not know about how mechanics liens work. And she paid the contractor in full, which most people will do. They'll pay the contractor and think, okay, I'm good. I've paid it. Well, that contractor never paid us as the supplier. When that happens, we have the right as a supplier to put a lien on the property, which means, as you well know, as realtors, you cannot sell that property until that lien is paid. That's why they do title searches. So one of the things that this little lady found out was, why do I have to pay it? I've already paid him. Why aren't you going after him? Well, he disappeared. His business went bankrupt. We couldn't get anything out of him. And that's why we have the right, because those materials are on her roof. It was horrible. I felt horrible that I had to put an $8,000 lien on her property, but I had to. And here she's in her 80s. She's just lost her husband. And I said, I will teach this to every person I know for future. So this is something that I like people to understand what they need to do to protect themselves as homeowners, or any type of, property that they own, is anytime you have any kind of contract or do any kind of work, you need to ask them before you sign on that dotted line who their suppliers are that they intend to use for the materials in which they intend to use to put on the property. When they do that, they want to jot down all of that information. So let's just say that I was meeting with someone today. This is how it would look. So Mr. Roofer, I'm really excited. I love that you are, giving me a really great quote. I am interested in doing business with you, but I do have some questions. First of all, I was curious, because I like to know what kind of materials are put on my home. So could you tell me real quickly, like, who are the material suppliers that you provide, you get the materials from? And you're going to be jotting these down, and I'm writing them down. Okay. I haven't signed on the dotted line with the roofer yet. Okay, great. I appreciate that. Is there any other suppliers? Now, you as a homeowner should be doing a little bit of due diligence yourself before you even meet with a roofer to know what kind of materials are used in most cases, at least the highest dollar cost of what's on there. Google's our best friend. Google, what kind of materials does a roofer use to replace a roof? You'll get a list of all the things that they use typically, down to the nails and so forth. So what I would then do is just kind of make sure that they've given me at least the heavy hitters, which I feel is going to be the shingles, the paper, the plywood, those sorts of things. The nails and things, okay, if I get stuck with that, it's unlikely, because they're usually getting them from Home Depot or something along those, which is on their personal or business credit card. And I'm not going to get stuck with Home Depot putting a lien on my house because they don't know where those nails went. So what I end up doing is I then tell him, I'm very interested. I do have one requirement, however, in order for me to do business with you. So I'm going to require that you provide me with a unconditional lien release from each one of these suppliers before I will give you final payment. And I will also require one from you when I hand you final payment. Now that's important, because one of the things that they are going to say is, well, I can't give you an unconditional lien release, but I can give you a conditional. Does anyone know what the difference between the two is? I'm just curious of my smarty realtors out there.
Unconditional is just no conditions. It's already done.
Yes.
The deal, once you exchange money,
Mm-hmm.
then there's no more liability.
Correct.
It's closed.
And so what's the difference of that and a conditional?
Because you have to satisfy a term or an agreement. So
Yeah.
it's not done yet.
Yes. So it's no different if they were to just not get the unconditional at all, if they just give you a conditional, because the conditional says the supplier, when they get the money, they release you. Well, how is that any different than when they go pay them or not pay them? So you're not protected really with that. You want only an unconditional lien release. And when you get that, and you get it not only from all the suppliers, you want it from him as well. Because what if he goes and says that you never paid it? Especially if you pay him cash, which I never recommend. But what if? So the biggest thing, if I have somebody that questions or gives me any pushback on why I need that, or I can't do that until I get your payment, that right there tells me that that contractor has cash flow issues in his company, and I don't want to use him. Because if he has to use my money to pay for my shingles in advance, then he's not the right person for me. He should have the money in his company capital to pay that, and then my money replenishes his capital. So that should be your first and foremost go-to with that being a concern. And I'm just curious if there's anybody online that had never known or was aware of this sort of thing.
I didn't realize that TransUnion was able to pull a more accurate score than Experian. Because
Well, not necessarily. TransUnion has its own scoring. She was saying, I didn't know that TransUnion could pull a more accurate score. All the credit bureaus direct can give you the accurate score for them because each one has their own score.
Okay, so that's because I've come to this like the Experian apps, and it shows all 3 scores, and then for some reason when I like have a attendant client who was pulling up her Experian, and then when she applies for an apartment or house, it's a different score.
That's probably because they're not pulling that exact. Her question was, I didn't realize if I have a client and they have a great score on their Experian, but when they go to apply for a home or something, that it's a completely different score. Well, it depends on number one, what kind of score the lender is pulling.
Well, it's for a rental.
Or for a rental,
Yeah.
whatever the rental company is using. They could be using a Vantage score just like Credit Karma.
That's what you're saying. Yeah.
So they may not be pulling a FICO 8, number one. Number two, they may not be pulling the Experian score, they're pulling the TransUnion score, which could be slightly different.
So is a FICO 8 free?
FICO 8 is free if you go to direct to the credit bureaus, yes. Well, wait a minute. You may have a small fee to pay direct through the credit bureaus. But if you just do Google searches to get a FICO 8, you could probably find some places out there that will give you a true FICO 8 score. That may not cost you.
Right? Like,
That's really that's what the
lenders
lenders typically go to. They use a FICO 8. They don't use a Vanguard anymore. Okay. All right, so amounts owed, we just talked about this. I'm not going to go into too much, but keeping those scores down, those balances down to 30% or less. Take into consideration also, that's part of taking into consideration the amount you owe versus the amount you can borrow. Anybody that tells you that you can't have too much credit is incorrect. You can have tons of credit. What you don't want to have is tons of balance. There's a difference. Too much credit is not going to hurt you. It's having too much of a balance on your overall as well as your individual. Because if you have $30,000 as credit limits, but you're only using 30% of that huge number, you're okay there. But if on individual cards you're over that 30%, you're hurting yourself there. So it can't be just on the whole. It has to be on the whole and on the individual cards as well to stay within that percentage. And of course, that's only based on revolving accounts. It doesn't have any effect. What will hurt you on installment accounts, if you think about installment accounts, they're going to be those things that you get this amount you borrow and it should be going in the negative. Like a house, your mortgage should be going down. It should never be going up. Because if it's going up, it means you're not paying and you're getting late fees and interest tacked on. So your balance on your installment account should be going in the reverse. And if they're not, a lot of people with student loans right now, or they didn't understand their student loans and they were being charged interest from the day that they actually accrued it. Were given the money for their schooling, and they didn't realize they were actually on a loan that is requiring them to immediately start having interest. They may not have to make payments. And I always tell people, just because they say you don't have to make payments doesn't mean you shouldn't. You should pay while it's in deferment because 100% of your payment is going to that balance. Once you come out of deferment, it's now charging you interest. So you got to pay way above and beyond to start knocking that original balance down, because the interest is going to compound, which is not good. We talked about the length of history. I won't go too much into this, the average age of your old accounts and so forth, how long the accounts have been open, how long it's been since you used the accounts. 10% of your accounts, how many of your accounts are new? We kind of talked about that. If all of them are new, that might affect your score by 10% because it's not enough history. When was the last time you opened a new account? That's important too. It can have that effect. If past payments problems you've had, but now you've got good payment history, that will help increase your score too. So it's just, even if you're having late payments all the time, turn it around and start paying things on time. I always tell people, don't use those grace periods. People use those grace periods as their payment date, and I cannot tell you how many times I see late pays on their stuff as a result of doing that. So here's the different types. Again, 10%, got to have both. Got to have some revolving, some installment. Credit cards and charge cards. The difference between them is a credit card is a Visa, MasterCard, Discover, American Express emblem on them, which means you can use them anywhere in the world. A charge card is like your Kohl's, your Macy's, your Home Depot. Those can only be used at those merchant locations. Home equity lines of credit, I don't know that I really need to explain that. I'm happy to stay afterwards. I'm sure most of you know what a home equity line of credit is, but I highly discourage people from using their home equity line to pay off all their debt, because they never learned before they did it. So they never probably get any education or help with budget and so forth. So they go right back around and charge up all their credit cards again. So now they're getting double whammied, and they're risking losing their home, because their home equity line, as you know, is a second mortgage. So if they don't pay on that and they're late on that, they can foreclose on that property, and you still have all that credit card debt that you've now re-established and created. Personal line of credits and personal loans. I always like to kind of let you know about this. I know this was kind of a new thing for Deja a little bit. A lot of people don't know about what is the difference between the two. And so let me just first talk about personal loan, which is under the installment side there. Personal loans are where you go to the bank, you apply for a loan, and they hand you a check for whatever amount you want to borrow. And maybe you're doing that because you're going to go buy a car, whatever the case may be. Personal lines of, and immediately, I'm sorry, on that personal loan, you start paying on that, whatever the amount is that you have to pay on that loan the very next month. Personal line of credit, you go in and you say, I need to have $50,000 on a personal line of credit. Well, you don't pay anything in most cases on it until you use it. So it's just like a credit card. And when you use it, then you have to start paying on it. And of course, you're going to start accruing interest on it. But while it's not being used, again, it's a situation that you don't owe anything on it. Now, again, read those disclosures and those fees, just in case they have a special thing that they require to charge you. You wouldn't want to be caught, not realizing that, because some lenders may do that. Other thing about that is making sure you're using that line of credit. Don't just keep it open. It's just like your credit card. They close it down. It's just as much of a big ding as a credit card closing. Okay. Obviously, installment is mortgage, student loan debt, car payments, personal loans. There are ways for them to get both of those types of accounts. So when they work with me one-on-one, I kind of help them. If they've been, especially people that have been through a divorce, there's ways for them to rebuild their credit. And that's what I see most people. They've been in divorce, or they've just really gotten into a bad debt situation. There is ways to turn their credit around. Excuse me. I'm not going to go through all this. This is kind of self-explanatory. I'm sure most of you know, but there's different types of cards, obviously. But I do want to point out a couple of great things on this to remind clients of is, when you have credit cards and things, you are protected more so than carrying cash around. Excuse me, let me get a drink of water. You do have the ability to prevent yourself from, losing all of your money and so forth, because if you get robbed or mugged or any of that sort of thing, or if it's used fraudulently, but not all creditors protect you. So you need to read those disclosures to make sure that they are protecting you in regards to if your card is lost and someone starts charging on it. Are you responsible for those charges? Not all lenders let you skate by with that. So you need to read those disclosures so you're not caught not knowing you have to pay for it. Also, a lot of cards have apps and things these days where you can set automatic tools like reminders. Maybe you want to set a reminder or a notification when you get to the 20% of your credit limit amount, so that I only have 10% left to be able to use, or I'm going to be maxing my card over that limit. So you can actually say, I want to know when my credit card limit gets to 200. Those sorts of things if you have $1,000 limit. And of course, you can also look at your credit balances and stuff right away too, which kind of makes it a little easy as well. There's lots of different cards, as you probably know. There's prepaid, debit, credit cards, most of them don't necessarily offer any kind of credit history and things. Some of them you can reestablish. It's always important that you read the fine print, know your card issuer's policies for lost or stolen cards. As I mentioned, keeping that card and phone number at home. So for the cards that you do carry on you, and make sure you let your issuer of your cards know right away when it's been lost or stolen, because the longer that you wait to call, the more they are at risk, the more they could make you liable. Okay. And also they will typically freeze the funds on the account so that nothing can be charged on it. A lot of people don't know, because if that's the card you use all the time and you're like, oh my gosh, I'm going to be without a card because they're telling you they'll mail one out, it takes 7 to 10 days. A lot of them, if you have good credit standing, they will overnight it and not charge you for it. They will send you a new card right away. So don't be afraid to ask for that. This is actually just something for you to know. It's just a little kind of a scenario here. Alex works full-time for a hospitality company. She makes $450 a week. She doesn't have a bank account because of the minimum requirements and other fees, so she can't sign up for direct deposit. Typically, when there's clients like this, they are paying at check cashing places 1.5% to 4% of their weekly pay. So you can see on the 4% side, every week she's paying $18 just to cash her check. If she times that by 52 pay periods a year, she's $936 a year she's spending. You divide that by 12 months, she's paying $78 a month just to cash her check. She's also going to be paying fees for, ATM or not ATMs, money orders and things like that. So she could be spending anywhere from $35 to $96 a month. However, if she had, say, a debit card, for example, she could actually take that and not have the check cashing fees. She would deposit it. She might have to pay if they won't take, the debit card as a form of payment. She might have to get a bill or pay by check or something, but she's going to probably end up spending $0 to $24 a month versus $35 to $96. So here's just some ways to reestablish and build your credit, protect yourself against identity theft by checking your credit reports every year. Dispute inaccurate information. If you've got information on there that's not yours or it's inaccurate, you need to dispute it through each of the credit bureaus that you see it on. You need to settle accounts. If you've got collections on there, you need to call and settle those accounts. It's not even hard to even say, hey, if I pay this balance off today, would you be willing to take this off my credit report? There are some creditors that will do that. Now,
one day.
It could take 30 to 60 days for it to come off, depending on, who it is. Not all of them are going to grant that. They're going to say, no, I want you to suffer. And they're not going to tell you that, but they're going to say, no, we won't do that. Now, if they say they're willing to, before you give them that payment, you get something in writing sent to you saying, when this amount, whatever amount you've agreed to pay that day is paid today on this date, we will be happy to remove it from your credit report. And you want it on their company letterhead or something to that effect. Because if they don't remove it, then you can put a dispute through the credit bureaus and they will have to take it off. Okay, but you got to get it in writing before you pay them, because if you do it the reverse, you pay them first and then ask for it, they're most likely not going to take the time to do that for you. And you have more leverage if you can pay it, if you have money to pay it that day, if you're doing any kind of settlement. Okay. Establish a new credit with a secured credit card is another way that you can establish new credit on the revolving side. You want to make sure you clear up any public records. Obviously, bankruptcies and things are going to stay on there. And be aware that student loans, in most cases, you cannot claim that as through bankruptcy. Don't close any of your accounts and pay off closed accounts with balances. Here's how long things stay on credit. 7 years for charge-offs and collections from the date it became delinquent. In addition to that, judgments. A lot of times things can move from a charge-off and collection to a judgment. So that's another 7 years. So you could have something on your credit report as long as 14 years. Taxes are the biggest thing. You can never, ever get your stuff off your credit report when you owed any city tax, state, or federal tax. It stays on there 7 years, even after you pay it in full. So taxes are nothing to mess around with. Chapter 7 bankruptcy is an individual or personal bankruptcy. It's 10 years from the filing date that it stays on your credit report. 11 and 12 are for business. And then chapter 13 is another personal, which is where you get a trustee assigned to you. They call all your creditors, they negotiate what is the lowest amount they're willing to take to settle the account. You then make payments on all of what that accumulation comes to, and you are relinquished of that debt at that point. Now, if you are ever late, they could remove the bankruptcy and you're still liable for the full amount. Creditors hate chapter 13. Let me tell you why. Because when you do chapter 13, most people never learn their lesson, just like when they use their at-home equity, and they go right back around and charge up all their stuff again, and then they file chapter 7. So creditors don't like chapter 13. Here's just a little bit of quick information on your rights as a consumer, and we are closely wrapping up, so just so you know. ECOA, the Equal Credit Opportunity Act, you cannot be denied credit based on your race, sex, marital status, religion, age, national origin, or because you receive public assistance. You have the right to have reliable public assistance considered in the same manner as other income. If you are denied credit, you have the right to know why. The CARD Act is the Credit Card Accountability, Responsibility, and Disclosure Act is fairness. You have two parts to it, fairness and transparency. It prohibits certain practices that are unfair or abusive, such as creditors hiking up the rate on an existing balance or allowing a consumer to go over their limit, and then they impose an over limit fee. Now, if they go over their limit and it's because of late fees and interest, that's different, but they can't let them charge more and then start imposing fees on them. Transparency makes the rates and fees on credit cards more clear so consumers can understand how much they are paying for the credit card and can compare different cards. I encourage you, if you have any clients you're working with, they need to be awoke. And how you can awake them is if they've got a lot of credit card debt, you need to tell them to pull their statement. I don't care if they get it online. They need to look at the back of their statement. They will show on, they are required now, credit card companies, to show you on your statement, the balance that you have on the front of your statement. If you're basically paying the minimum, how long that's going to take you to pay it off. It is a extreme shock for every client I've worked with. They've never looked at that. They had no idea, and they could never understand why they couldn't get it paid off. And so I teach them about that. You must be told if information in your file has been used against you, which is the Fair Credit Report Act or the FCRA. And you have the right to know what is in your file. You have the right to ask for a credit score. You have the right to dispute incomplete or inaccurate information. And the consumer reporting agencies, like the credit bureaus, must correct or delete inaccurate, incomplete, or unverifiable information. Consumer reporting agencies may not report outdated negative information. In most cases, a consumer reporting agency may not report negative information that is more than 7 years old or bankruptcies that are more than 10 years old. And then the last one is the FDCPA, the Fair Debt Collection Practices Act, may not harass, oppress, or abuse consumers. Creditors must see certain contacts and communications when requested to do so, and they must identify themselves. So they can't call you and say, I'm calling from your child's school, and then drop the bomb that they're the collection agency. They may contact you, though, between the hours of 8 a.m. to 9 p.m. local to you where your time zone is, and must send a consumer a written notice within 5 days after they first contact you to tell you who you owe the money to, the amount that you owe, and a notice of your rights. They may not communicate, though, once you have hired an attorney. So all you have to do as a consumer is tell them you're represented by XYZ attorney, their phone number, and hang up on them. These are my upcoming workshops. If you would like to send any of your clients, if you want to save that Eventbrite link that you see at the lower left there, that is where you can get people plugged into different things that I offer. If you'd like to learn any more about any of my workshops, of course, be sure to register right there on Eventbrite. I do offer a time management workshop, as well as you see my small business workshops. If you have clients that can't attend Monday evenings, or when I typically, the first or the second Monday of each month in the evening from 6 to 8 is when I offer my credit and money management workshop. They can attend that one in person in the town center area of Virginia Beach, or virtually. And I also offer it Saturday morning for the credit and money management workshop. That one is virtual only though. So that one's usually the fourth Saturday of each month. So any questions that I can answer for anybody, I would be happy to take questions at this time.
No, I don't have any questions.
No questions? I would love to just hear something you guys took away today that you didn't know before you came.
Well,
Go ahead. Do you want to come up here? So we don't have the issue, or
oh yeah.
Deja's going to share what she has that,
It's like my third time doing this presentation with you.
oh, is it really?
Yeah.
Oh my goodness. She's heard this presentation already. So go ahead, Deja, share something that you learned.
It's more so like kind of refreshing. So the annualcreditreport.com, make sure I do that every year, set a reminder. And going to the FICO 8 in case I ever have like a tenant client that wants to know what credit, score she's likely to get. So I'll probably send them there so they can start there first. So we're doing like a consultation. And if they don't want to talk to a lender themselves. Is this still a hard pull? For FICO
Yeah,
8?
that's a great question. I forgot to mention. There's two different types of polls. Obviously, you probably know this. Soft polls which is what we do when we pull your TransUnion report.
Mhm.
Soft polls have no effect on your credit score. Hard polls do. And there's different levels of hard polls. So it depends on how hard of a pull they're making on the credit report. Those always affect the credit score. So were you asking me if the direct through the
So the FICO
bureaus?
is going to be like a hard pull, I'm assuming.
It could be. It depends. I would always ask, before you pull anything. I always ask everybody, is this going to be a hard pull or a soft pull on my credit?
Mhm.
So if you do have myfico.com, I think is the one you can get your score for a FICO 8, but I would definitely call to inquire as to whether this does have a hard pull on your credit or is it a soft pull?
Okay, so then that's cool. Or TransUnion for a soft pull.
Mhm.
And then getting an unconditional lien release, just because I had a plumber come out and he only takes cash. And it's like that's something that I could have probably used just for like my cash services. He's great. I don't think he would do anything, but still keep an honest man honest.
Yes.
And a personal line of credit. So I'll probably get that open sooner than later so that way I can start building up time. Even if I don't use it, I'm like setting a reminder. I'm sure I'm going to use it.
Mhm.
But I get a personal line of credit so I can start putting that time in and start having more revolving credit.
Mhm.
And getting like a business line of credit. Can I do that too?
Yeah,
pretty sure.
absolutely. Yep.
It's just like I'm still have
The
questions
banks
about
can
that.
actually answer most of that for you.
Mhm.
I'm not a banker,
I'm gonna
so
go to Fulton,
Yeah.
see what they have to offer.
yeah, absolutely. And I think you've got some contacts for Fulton I've given you.
Yeah,
So
I'm gonna talk to Shara.
awesome.
Yeah, so Shara's another person who works at Fulton, and I can share that with you
Yeah,
guys
absolutely.
too. So that's my takeaways.
Very good. Thank you,
Thank
Deja.
you.
Anyone online want to share something that they took away today? I would love to hear from you.
I mean, I will say I didn't know that this in its entirety existed with what you guys do. So this was fabulous. I absolutely love it. I've got a client now
Mhm.
that definitely he's not going to be able to buy probably for a year. And I'm definitely going to send him your way because he
Wonderful.
needs all of these things, all of it.
Wonderful. I would love to work with him. I mean, I hope that you get that I'm passionate about. I don't get, I'm not in this for the money. Nonprofits don't pay. I'm definitely worth more than what I'm getting paid here, but I do it because I'm passionate about what I do and I love what I do and I love helping people. And truthfully, I wanted to do exactly what I'm doing here in a business venture, but I could not figure out how to do it to where I did not charge people because I knew the people coming to me would not have the money, nor did I want them to pay me. So if you know people that are out there paying someone to fix their credit, this gentleman that I just increased his score by 74 points, he has been sitting in the 500s for the last 3 years, paying $100 a month to someone that's going to fix his credit. And I helped him in less than 3 months.
This is why we're here.
Yes. Anyone else have something they want to share that they took away today?
Well, Theresa, I've got a bunch of things I want to share, but I'm not going to share, but I am a numbers nerd. I love finance and math and all the things. So I know a whole bunch, and I don't often go to a class where I don't already know it all.
Mhm.
And yet I still learn tons from you. So you're super knowledgeable. I can see your passion coming through, and I loved this class, and I can't wait to work with you in the future.
Wonderful. Thank you. I so appreciate it. I always feel like if you take one thing away, it's still one thing you got to have in your little pocket of tools. So
Absolutely. No, and I've got a couple. So I really appreciate your time.
absolutely. And our goal is to help clients out there. I know that's what you want to do, and I want to do the same.
Mm-hmm.
Very good. Anyone else want to share? No one? Okay. Well, again, you've got my information. You should see it on the screen. That is my cell and text number. If you have a client that wants to meet with me, what I recommend that you do is have them text me at that phone number. Because I'm typically in meetings back to back all day long, every day, it's very hard to get me on a phone call, as it is for probably you. So keep that in mind. It's best if they just text me and say they would like to schedule an initial coaching session with me. Remind them there's never going to be a fee. Put their pocketbooks away. I'm never going to ask them for any money or debit cards or anything like that. And please make sure that they text me. I will text them a link to my calendar, and that way they can get their first appointment set up with me.
I will definitely be doing that. So if you hear from him, I'll shoot you his information. But yeah, thank you. Thank you so
Absolutely.
much. And thank you,
My
Deja.
Thank you. Thank you for being here. I'm gonna send
course.
her information to you, and then also give your information to her, because she's asking if you can send over your the zip code that you live in for attendance.
Yeah, if you guys could, just because I have to
Yeah.
show that I was here, my boss is going to go, where have you been, for a couple of hours? So it would be helpful if I could just put you guys as my attendees. So if you're able to get at least I think you might have maybe a phone number and email, and then if you could send her your zip code, that would be helpful, because I do need that information to be able to put in that you were in attendance. Other than that, y'all are free to go. And thank you again so much for your time. I hope that I left you with lots of good gems and nuggets to help those future clients. I'm happy to, oh, did they ask something?
They're putting it in the chats.
Oh, wonderful. Okay. Oh, Stacy, with regards to your question on how many revolving accounts you should have, realistically, there's never really a limit. As I said, your credit amount is never an issue. Like how much credit you've been issued, it's how much balance you carry, because that's when it comes into that debt to income ratio.
Yes, I kind of caught that after you had already, it was obviously on your list to say. So I kind of stepped the gun ahead of time. But yes, thank you. That was actually very informative.
Great,
because I have someone who's trying to build their credit up to buy. And I said, do you even have a credit card? And they're like, no. And I said, having no credit is just as bad as having bad credit.
And that was my issue. I don't remember if you were here at the beginning, but that was in my story, is that I didn't have any credit. So I had a hard time establishing it back in the 80s, because we didn't have Operation Hope and the internet and all that sort of thing for me to build credit or know how to do it. So I had to start asking successful people, like, how do you build credit? First thing they told me is go into the a department store in the mall. They hand them out like candy, you
Exactly.
know. Okay. That was my first credit card, was Learners. And so for those of you old enough to remember Learners, I'm probably age. So yeah, absolutely. I think I don't care where they are in their credit journey, no matter where they are on their score, there's always a way to turn it around. And there's never really a magic time frame I can give them. It's all going to depend on them. We don't do any of the work for them. We help them. We teach them what they need to do. They have to be willing to do the work. They got themselves there. They've got to learn how to get themselves out. And we teach them and hold their hand until they get it done.
Wonderful. Well, thank you so much. As I said, real estate's always a learning journey, and anything I can learn to pass along is always just always helpful. So thank you so much.
Absolutely. Don't forget to also share that dfrscore.org. That is a
Yep.
great thing for your clients to learn a little bit about how they can prepare financially for any kind of disaster. And it's an anonymous survey. It's not even a survey, it's a questionnaire. And it spits out a score, and then out of 100, it's also going to give them a plan that they can print or save to their computer afterwards.
.org.
DFR. So D is in David, F is in Frank, R is in Romeo, score.org. So it's going to give them a score out of 100. And that's where they fall on the preparedness level of any kind of financial disaster.
One thing that I had a question about, you go back to the screens and
And anyone that needs to go, feel free. I'll stay around for any questions.
it was a slide about being a HUD certified home. What was it? It's like the
HUD
home
certified
preparedness,
home.
like the home agent.
Oh, yes, yes.
Yeah.
The coach.
The coach, yeah.
Mhm.
So how can us realtors become a coach?
Well, you would have to be employed by Operation Hope to become a coach. You know, that would be the first step, is to see if there's any openings to become a coach. And then you would be an employee for Operation Hope.
Interesting. I
Mhm.
wonder if you can be an employee and still work with Coastal Town, because technically they're not a brokerage, so it's like you have to hold your license. The Coastal Town holds your license, and then you'll just work with Operation Hope.
Yeah, I don't know. I'll be honest. I don't know much about that. The only thing I know what they do is, you know, helping to get that down payment, helping them to learn how, you know, the process of becoming a homeowner. And they do help them with connecting them to lenders, if they need that as well. So,
It's like an agent to me.
yeah, I mean, I don't know much more about it, but that's the
But that
extent of it.
Can you go back to that phone number, or is it like the same number? Or
Oh, that slide. I'm sorry. Let me get back to that. She was asking about our coaches and stuff here. Those of you online can't hear her. Sorry. Let's see. That's going to be back at the beginning. Right there.
It's like one, oh yeah.
I don't know why you can't see it though. We need to pull this down a little bit.
Oh, I see the phone number. It's
See
just,
it?
yeah,
Yeah, it's at the bottom.
yeah.
I can get it to you if you can't see it.
So 1-888.
Again, thank you all. Does anybody else have any questions, comments, anything that you'd like to share?
I'm good for now, but I got your information for when I do.
Great. Thank you, Tanya. Anything else? Otherwise, I'll let y'all go and I'll close the meeting out.
Thank you, Theresa.
My
We appreciate it.
pleasure. Absolutely my pleasure.
Bye-bye.
Bye-bye.
Thank you.
Absolutely. Thanks, Thomasina. Thanks for helping me get connected, everybody.
So yeah, I'm sending out all this information to the team too, because I wonder like if anybody else is interested in becoming a partner or coach. So Hope National Call Center, Dallas, Texas.
Yeah, if you go to operationhope.org, you'll be able to find it too on our website. If you look at our contact us. Did you get these zip codes on here? Because I won't have access once I close it.
Yep, I got it.
Okay, perfect. Thank you.